it's the small caps victory today. The Russell trying to break out. We've got Nate Peterson with us, Director of Derivatives Analysis at Schwab Center for Financial Research. These small caps want to join the party, it seems like. Nate, do you believe it?
I do. Yeah, I'm glad you went there. That's exactly where I was going, 2.3% on the upside. But what's significant about this breakout, it's not quite a 2-year breakout, but we're right there. But it's the fact that the 10-year or yields have remained relatively near those 2-month highs. And if you look at those rate-sensitive areas like the Russell, like biotech, like solar, all of those guys bounced back over the last 48 hours. And what is that price action signal? It says, look, the economy's stronger than we expected. The AI story is intact. We're going to broaden out this rally. The money flow is showing evidence of that. Now, tomorrow we can get anything on the PPI, so anything could happen there. If rates do spike up tomorrow, then we might be having a different conversation. But the fact that the money has come back so quickly into small caps, biotech, solar, REITs, et cetera, those types of areas of the market tells me that the price action is saying this economy is strong, the retail sales is a blip, maybe it's seasonal, or whatever the case may be. We're not worried about the CPI, what we got on Tuesday, at least not right now. Let's see what a PPI does, and let's see what PCE does on the 28th.
Think there's still hope for bond bulls if PPI is light tomorrow, or if PCE doesn't show the same degree of warmth as CPI? Because we're trying to take back some of that CPI sell-off in treasuries.
Yeah, so here's my thoughts about what's going on with inflation. No, we don't have enough evidence quite yet, but when I look back over the past 4 or 5 months and I see what happened to the 10-year, which went from basically at the start of last November, 5% all the way down to 3.8%. We get the Fed pivot in on the December FOMC. I was wondering, did the Fed blink too quickly? Because the Fed hasn't lowered any rates, but the bond market did, and ease those conditions for the economy. Did that give some more confidence in terms of business spend and the consumer in terms of going out there and having this belief that the Fed's getting ready to cut rates? We see higher GDP, higher retail sales in December, if you go to that month, higher durable good orders, non-farm payrolls. It looks like a really strong economy, but I don't know if we're out of the woods yet on the inflation side of the equation. I think that tail risk would be that inflation does actually begin to tick up, and the Fed actually might have to, I'm not going to say necessarily raise rates, but a very minimum higher for longer.
Okay. All right. Now, the higher for longer thing, it seems like it was the baseline. Then we kind of moved away from that. Now we're kind of shifting towards it again. What's interesting is the way the market has found its ability to rotate, no matter what the macro narrative is, into something. So if we get this Russell breakout, how much impact do you think the bond market's going to have if we're in like full-on melt-up mode? We were talking with Jim Carson about the vol up, stocks up thing. I know you got thoughts on that too, so tell me about it.
Yeah, so certainly it could be a melt-up. We're seeing melt-up in Bitcoin. We've already seen melt-up in AI. Normally, as you know, there's an inverse relationship between yields and small caps. Relative strength, one way to define it would be small caps are doing what they're doing in the face of rising yields. So let's see what happens to see how they react if yields remain sticky or if they tend to kind of melt up as well. But it speaks to that broadening. But if the Russell breaks out, that might really catch some eyes in terms of rotation. Who potentially could suffer? I think it could be technology. It could be mega cap tech. That could be a source of funds. February is the worst month. It's supposed to be for technology. I don't think NVIDIA is going to miss. I don't expect them to have this dramatic sell-off post-earnings or anything like that. But seasonally, and given the setup and the run we've seen in many of these names, I'd be a little bit concerned about technology if Russell breaks out. But otherwise, it's good news for the bulls. And then we'll see how far do they want to take stocks with this broadening theme.
Okay. All right. So if we broaden out, what then seems possible? I mean, would we see a VIX keep climbing? Do you think that's like the melt-up phase as opposed to like a fundamental, earnings-driven style rally? Are we talking like valuation blow-off here?
Yeah, that's the problem. If the velocity of the ascent starts to go parabolic and there's a lot of chase, FOMO, get me in at any price, then yeah, that can be worrisome because that just can create an environment where you don't really know how to time when it's going to top out. And then the more or the steeper the velocity of that melt up, then likely the bigger the correction that can follow. We've seen a number of these types of instances that have happened in the past when money flow runs after some area of the market or the market in general. When you get that correction, depending on how high and how fast it gets there, that could create kind of an uncomfortable correction. We'll have to wait and see how the rest of the market plays out here for the rest of February.
All right. Thanks for the thoughts, Nate. Good chat. Nice way to cap the big Russell rally today. Nate Peterson, Schwab's Center for Financial Research.